Good morning, everybody. Gary Full here, and it's Monday, and I want to share to you something that is interesting that I think will be helpful in the way that you look at things market-wise. It's important. Today's December 8th of 2025, and this is the 15-minute E-mini S&P, and we're trying to get these daily. We're trying to do some live trade with this stuff. So I think it's something that that you'll enjoy. And there wasn't really a trade setup, so we can discuss it, the more aggressive ones, and we'll take it down to the least aggressive ones as far as that's concerned. So you have a situation here where you have a market that has a trading range. So I'm going to take the Europe's trading range, and Europe's about 2 o'clock. It's about 2 o'clock in Chicago time, the Central time, of when the market generally will open. So we like to mark the opening of that. So the market's coming down. The market has some type of a rally, not a big deal. In the middle of the night, there's no volume. Then we establish some type of low that happens around 4 o'clock in the morning. Okay, so I want to mark that low, that initial low, only because it takes it out in the spring position. So I always like to mark things that give me the potential of a spring or a potential upthrust, because those are where a lot of our trades can come in. So I'm going to mark the low of that market. Now, the reason why I do the market here, the line here, little line drawing lesson, is because we have a low here, a low here, a low here. So this area here is about the support, right? Give or take a couple ticks. So as you're traveling through it, what you'll notice that as you're traveling through it, these closes become up, down closes sometimes. They're meaningless in the middle of a trading range. Those up, down closes matter is when the market's at resistance on top of a creek or top of or up about a support, in which is a change of character. This market has been kind of going down, okay, sideways. So the up down closes really are just part of the back and filling, as you say, mechanism. So you have one middle, well, here you got a mid range, low, high, mid range, high. So basically, the alternate closes, not a lot. Well, we know the first retest of the high, and this is the high, basically, this is reactionary high before we went down the high. We mark that bar here. It forms the upthrust position. Generally, that's a nice sell. Make the first retest of resistance. Well, if you take that trade, your stop becomes here. Some people don't have to trade this stuff because they want to wait for the market to open. Stock market in New York is not open yet. The future is not stock market. And you can trade that particular upthrust. Okay? What you're looking for after that, the upthrust is pretty clear, is how the market goes up or down after the upthrust. If it's bearish, we just head down with a couple bars. If it's bullish, we're going to absorb to go higher. Well, you have the upthrust, low and close. Now, the next two, then you get a little selling come in. So the CM is selling to the rally. How do I know that? Because it's maintaining the resistance high, not in the accumulation phase, but because of the closes, the mid-range lower. But they're just selling off the longs, which is their job, right? They're selling it to the front of the specs. The market then goes up. Now we'll see the quality of the retest. Well, got two small bars here. So 2 bars, 1 bar, 2 bars, replace 1 bar. It's a wyckoff thing. David Weiss worked a lot with it. Longer, shorter, the upside, downside, it spent more time on the trying to go up and down. A tad weak, but the background's kind of positive. Nothing that we could get gleaned from that, right? Then we get a larger bar up thrust. Boom, might get that bar, and then the next 3 bars, so 2 bars and weaker. So this is considered kind of weak action. Since we had the selling here, we wouldn't consider absorption. But I wouldn't buy it here, and I wouldn't sell it there necessarily, right? If you were selling it, you'd sell this. But if it's a little bit, hard for you, then wait for more clear of supply or more selling. Well, this bar, if it's absorption here, this is where you have to think market story. If you're thinking bullish, and this is a spring, and it's absorption to go higher, that's golden. That'll be great, right? But here's the problem. Here's the problem with that. The problem is that this bar is the kiss of death. I think the last time I wrote it as COD, right? My turn. Okay. Change of character. I'm not changing. I'm kiss of death. Kiss of death. Not change of character. It's also a change of character because instead of absorbing here, the market's selling off. So 1 bar down takes out 2 bars. 1 bar down takes up 2 bars. The ease of movement is lower, but not bearish. Okay. So I'm waiting for the market to absorb, or I'm waiting for the market to do what? Or I'm waiting for the market to show some supply or to kiss the death bar. I get it right here. It says, once I see this market here, it tells me it's not absorption anymore. It tells it's not absorption. I can actually sell this bar here, even though it doesn't take out support. Why? It's like a sign of strength that may happen in the market. It doesn't have to take out resistance for a sign of strength. But a sign of weakness doesn't take it out to the downside. It doesn't have to. It eventually does, but it doesn't do that initially. Okay? So this now becomes a kind of kiss of death bar. Instead of being absorption, I now know that what I thought could be absorption is now what? It's now bearish. Now selling coming to the market. Okay? Now selling has come into the market. So since I know that selling has come into the market, selling has come into the market, what do I know? Since selling's coming to the market, I now know that to the right-hand side of the trade range, because I'm getting this wide bar. So the wideness of bars on the right-hand side is when the market begins to move. Okay? It's when the market begins to move. Okay? So it's the widest bar we've seen. If it's absorption, we should head up. If it's not absorption, we should head down. We head down. Boom. Okay? That is the kiss of death to me. Now, this would not be, because this is today, this would not be considered a spring because you just said that the market's not going to resistance. Right? It's coming from resistance. It's not going to give you resistance type of thing and then also give you a spring. It's not going to be contradictory to each other. So this is not something that's buying off the low to go higher. It's a situation where the market just short covered at the end, but still somewhat of a negative type of thing. Right? Still a negative type of thing. So this is not considered a spring because it's coming from weakness. And we know that springs fail from weakness. Market there. Maybe a shorting of thrust. Yes. Enough for me to get long? No. Enough for me to stay short? Yes. Yes. Okay? That's what's very, very, very important. That's what's very, 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 very important, right? So now, go down, a little short of thrust, but the volume is lighter, indicating no buying. Buying is dried up. So even though it looks like an F result bar or easy movement down, it's the downside, that's negative. It's going down a lighter volume, there's no buying. Boom. Now the market does something that I like. It's still lower, the volume's not excessive but higher. Once I see this particular happening, I'm trying to see if I can get 2 points to collect the third point by reverse trend line to give me a count. So my first initial read was this reactionary low, going to here, and boom. Okay. And the reason I take this one is that this market's set new highs next bar. So let's take that one. Let's show about angle. All right. That's what I have. Now, I want to extend that more. I got 2 points. I want to extend that to be a third point. Okay, let me just do this here for you. I want to extend it to a third point. Let's see here. 1 second. I want to draw that. See if this works. Draw my third line. Boom. The reason why I draw it here is this was the bar before a new high. I can draw from here too, But this one I did because that's the buying bar. So that buying bar now becomes resistance, which is why I drew it there, right? Support becomes resistance, resistance becomes support. So I drew it at the first line there. This was the markup bar before the market broke. And voila, you see a perfect retest. But that's not good enough to be long or not good enough to get a short. If you notice on the retest, you're overbought in a market that has a reverse trend line that works perfectly. So it looks like it was short range, looks like a mid-range close, looks like the potential of stopping action. So the next couple of hours, I want to judge the quality. The market goes up, but the volume really didn't increase anything. The market's still bearish. I don't see stopping volume to the downside. Some action I do, some bad holding I do, we may be close to a low, but we may not be able to make a retest that low. There's your retest that low, go across, and it's right now. Now, in the bullish market, you would buy both hands, how much you can buy. That's a nice retest. But again, that spin's coming from weakness. And the first initial reaction didn't give you much. I'd be very skeptical about buying that one. The structure's not properly correct at that point. If you could understand the so you want to draw those lines about a 45-degree angle for a reactionary low that connects a secondary low, so buying wing, and that gives you the third one. And that's what you have. Now it's a retest. Now, if you're an aggressive trader, you think it may go up to here, you may get a retest back up there because you have a little cause. You're bucking the trend. And if you lose money and bucking the trend, you're going to feel bad, make a trade, but you should probably get some shortcut on this rally. But notice, when I initially did for the class, I had this line drawn. But because we went a wider break, I changed my reverse trend line to that. You always have to adjust reverse trend lines. And it's just, you have what you have, but you make them at a 45-degree angle, and that's exactly what you want to do with this stuff. So that's where currently at now. It's a 15-minute E-mini chart, and going nowhere fast. Europe is closed, so all the onus is on the U.S. market to move it. Doesn't look anything else pre-holiday. I hope you enjoyed that one about today's 15-minute E-mini chart, and I'll send you guys a link.